8 February 2023, Wednesday, and MAO with Kel once again. Now, Jerome Powell has spoken, alright, more rate hikes is on the table, and the stock market is buying. This is something new once again, or is it? Because we have been seeing repeatedly, right, the market knows that Jerome Powell will need to increase more interest rate because he has room right now. The non-farm payroll was outstanding and definitely means that if inflation is staying at whatever level we are now, there's still a lot of room for Jerome Powell to exercise that. But the question is, should we be buying or should we take profit? I'm going to make my statement here itself. Let's short the market right now. Isn't it? Alright. So why am I so bearish? Let me share with you with more details. But once again, disclaimer apply as usual. And thank you, Ames, for the kind sponsorship. Now, let's just thank everybody here first. Thank you, guys. We have hit more than 800 subscribers. Of course, to me, to compare with other YouTubers that have thousands to tens of thousands, some millions, I'm nothing. But the thing is that I don't promote much. It's based on my sharing that I accumulate daily so-called subscribers. And I'm not a YouTuber myself. I didn't subscribe to YouTube to become a YouTuber. I just put my videos here. Hence, therefore, right, to me itself, my job every day is to look at the market, study and present the market outlook to all my students and the public. Now, the numbers are quite not too bad, from 200 people, 200 views to 400 views each day. I'm pretty happy with that. But more important, people's asking me, Cal, when are you going to go back to the spin the wheel thingy? Sorry guys, it was Chinese New Year. It was a very difficult time for me. I need to run up and down, and my health took a turn recently. Then followed by my kids. Oh my god. So I will stop here for this spin the wheel for this week. I'll restart next week, okay? So guys, if you're waiting for this, watch out for my next video, okay? Alright. Let's just hope that Binance is okay, because Binance just came out and said that they'll suspend the US dollar transfer. Now, this is something very similar that when FTX also came out, something similar. I'm not saying that it's a FTX repertoire, but it's still not a very good thing. Alright, so millions of dollars of crypto flow out of Binance after it announced the suspension, but the company said they are net positive. Why is that so? Well, they didn't give any answer for that. They gave no reason for the decision, and in fact, they said that this is very, very small. I checked on the numbers. Well, for $172 million is a lot of money, but for a company that's worth $42.2 billion of crypto assets, well, okay. But do take note, 42.2 billion worth of crypto assets is really crypto. So if anything goes wrong with the Bitcoin and anything else, oh, this thing can evaporate pretty fast. So still, it's an overwhelming net positive on a net deposit, apparently from the spokesperson. He said there's nothing to worry about, things are good. And of course, we noticed that the BNB, the Bitcoin exchange token, not affected at all. So let's hope everything goes well. Okay. Let's recap what happened last night. Oh gosh, the Dow Jones rebounded 265 points. The NASDAQ rebounded 263 points. Wow, basically covered back all the losses of last 2 days. And S&P back to above 4,100. Now, remember, Mike Wilson from Morgan Stanley says that 3900 is a level to short. And the time itself, right, I was giving you a view. I said that, look, if everybody thinks that 3900 is a short level, then if the market goes above it, usually it will run for 200 to 300 points. So mathematically speaking, we should see a peak between 4,150 to 4,200. I'll write it down for you guys. So in my opinion, okay, my opinion is that because of what Mike Wilson says, I think that we should see a peak between 4,150 to about 4,200. So to me is that if you short anywhere between here itself, I think this is a very good place to take a short position. Alright, and of course with the very important CNN Fear and Greed Index at 79 right now, wow, that make it even much better. Okay, so let's take a look what happened last night. The Dow Jones finished up 250 points higher. NASDAQ up by 1.9% because Federal Reserve Fed chairman says that inflation is declining. Now, we all know that it's off the peak, but is it really declining? Honestly, we all know that with the BLS new changes this month, I'm not even half surprised to see the number coming down, okay? But the thing is that we all know that if the orange, the milk, the food, the bread that we are all consuming every day is the same price than last 2-3 months or even higher, we know that it's not the same number that Fed used. So we all know that what happened last night at the Economic Club of Washington, All right, the Dow gained 275 points, and because of the comment on disinflation that Jerome Powell is using right now, and it's indicating that, right, this rate hike campaign is doing well. So with the inflationary process ongoing, the process of getting inflation down has begun as a good sector, but he says that it's a long way to go and it's very, very early in the early stage of the disinflation. All right, so good. It's coming down, but I don't think we have enough time. Why? I'll explain to you shortly, okay? So what happened is, you can see what happened here. This is where Jerome Powell was speaking. The moment he started speaking, wow, instantly the market reacted. Seemingly that the boys were there, right? The plunge protection team. Then after that, Jerome Powell says that, okay, but because of that, it's all right. We may need to put in more rate hikes, and bang, the market come down instantly. So at this junction here, we thought that everything is good, because that is very normal, right? Then at 2 a.m. again, wow, the buyers keep on coming in relentlessly. Wow, okay. So what's happening right now? Basically, the V-shape. So is it because Jim Cramer say buy on dip and he's correct? Well, I think that is partially right, because the bullishness is still pretty heavy right now in the market. But to me itself, this is not a very good sign. Let me explain to you more in detail. So let's just watch Jerome Powell, what he has to say during his interview. This is one segment of it, and it's pretty clear that he is actually hawkish, but the way the market translates is become dovish. So let's hear him out. Let's go. Come, Jerome Powell, let's go.
Where you are, you're basically saying that the jobs data that came out was a little bit surprising, but in the end, you've taken it into account, and you're pretty comfortable with the guidance you gave last time, and you're not prepared to give anything that's completely different guidance than you gave last week.
Well, I mean, this is a world in which we've had the labor market report, and I think that it underscores the message that I was sending at the press conference and in the meeting, that we have a significant road ahead to get inflation down to 2%, and I think there's been an expectation that it'll go away quickly and painlessly, and I don't think that's at all guaranteed. That's not the base case. The base case is for me is that it will take some time, and we'll have to do more rate increases, and then we'll have to look around and see whether we've done enough.
Okay. And 2% is the rate we had for the last 25 years before inflation came along. But prior to that, for most of U.S. history, we were higher than 2%. Is it that 2% we're now so used to 2% after 25 years of it that you think that's the appropriate level?
So we went through this long period where inflation was really anchored around 2%. And we think that, and economists think that that's because people start to expect 2% inflation. And inflation, it's in a way, if everyone expects that prices are going to go up, prices and wages are going to go up 2% per year, then plus productivity in the case of wages, then it will. That's what will happen. Having price stability, real price stability for an extended period of time is just enormously beneficial to the public, because you can then, on the back of that, you can build a very strong labor market, as we had. We had a labor market with really 3.5% unemployment in 2018 and 19. And we had inflation running, just barely getting to 2%. Wages moving up the most for people at the lower end of the spectrum. And so this was we all want to get back to that place, but the bedrock of the whole thing is to get inflation under control.
The unemployment rate hasn't come down as much as people are going up as much as people thought. In part, some people say because we don't have as many immigrants coming in the country, legal immigrants coming in, taking some of the jobs they otherwise would take. Do you think immigration is an issue in terms of giving us more labor?
All right, so basically Jerome Powell is speaking and saying that, right, things is going well, employment is doing good, and that gives them a lot of room to increase interest rate. And of course, economically, he is also saying that everything is good. There's no need to worry about. So all is good while we're looking to get to the inflation number of 2%. Of course, he did say that it may be adjusted later on because, as time goes by, the inflation number can go to up to 2 to 3, maybe. That's what I added on. But nonetheless, this is a very, very dovish feel on a hawkish note. All right. So this is something very interesting. Let's continue from there. So let's just look at the NASDAQ right now. The NASDAQ has came down, as you can see over here on the screen. Where's my mouse? Okay, here we go. Okay, this is the lowest point. The NASDAQ went to 10,440. And then after that, it ding-dong around this area here. And when it failed to touch back to the same low here, I already suspected that this could be the bottom of the market. But hindsight is always 6-6, and I'm not going to claim that. But once it crosses the 150-day MA, which coincides with the with the Fibonacci, I know that we could be heading towards here, and that is somewhere around 13,000 area. Okay. Now the thing is this is on the right on, whereby we saw Amazon not doing well, Apple not doing well, Alphabet not doing well, Microsoft not doing well, and Meta not doing well. So you can see that, right? Year on year, they're all pretty negative compared. All right, and of course the growth itself, right? Some of them, most of them are in the very low numbers. So all this tells you that if these companies, the top 5 are not doing well, how come the NASDAQ is going up? So it's a lot of buying based on fresh funds, and could be a lot of short covering. But still, the bottom line is that the market is, the earnings are not there. So how can we be calling for a buy? Now let's look at the Dow Jones. I know I think that a lot of people is now really confused right now, because the Dow Jones honestly has been going sideways for the last 60 over trading days. Okay, it's trading between 33,000 to 34,000, so it's about 1,000 point range for the last 60 days. So of course, if you are a range trader, you could have a very good time. But if you're a trend trader, then you'll be like, one moment you're like heavily short, then you must cover instantly. And you're heavily long, the price come back off. All right. So that is a big issue right now. Now the 61.8 is 33,800. So I already shared with you guys, unless the Dow Jones can close below 33,800, then we will see the number going down to 32,820. Now you can see over here on this side on the screen, you can see that except for one day, the one in red, okay, the one in red, only for one day, the market closed below 33,800, but almost instantly, the very next day, the market rebounded. All right, the next day, the market rebounded instead. All right, you can see right here. So basically, right, this 33,800 is a very strong support. As long as the market cannot go below it, the selling will not come. But if you ask me right now, I think we are more or less somewhere around there. Why is that so? Because the fear and greed index is trading at a crazy number right now. It's trading at 79. Now, 79 is a very high number. So let me just bring you to the chart, and you can see for yourself and why am I pretty concerned at the moment right now. Okay, let's take a look. Now this is the CNN Business Fear and Greed Index, and we are now at the 79 region. Now yesterday was 77. Now if you look at it here, guys, this is the number here. You can see that since April this last year until now, we are at the highest level. The last time when it was around this area was a 62. That's where the market pulls back. And then after that, back in August 12, my birthday, it pulls back over there. And then it was here itself on the 29th to 30th of November. That's where it pulled back. So each time it hit about 65 to 70, the market pulled back. But today we are 79. And if you look at it right now with the market momentum, you can see right here now, the current S&P 500 is trading. Let me just go very accurate there. The S&P 500 trading at 4164, okay? And the 125 days moving average itself is trading at 3921. So we are basically 240 points away from the moving average. But if you look carefully, guys, every time when the market is too far away from the moving average, it usually will catch it up. So the thing is this, if the market is above the moving average, as you see over here, eventually it will catch up and meet down again. Do you see that? Every time it goes too far away, it will come back down and meet it. So my point is this, we are now pretty far away. Hence, therefore, with the earnings not there, I believe that there's a very good chance we'll see the market coming back down very soon. And of course, the stock price strength, we are now at 2.76, is already at the high, all right? The net new 52 weeks high and low on the NYSE. Then the market breadth itself is really incredible. The put call option, the put side is at the very low end. The last time we saw this, the market actually sold off after that. So the market volatility is still at the low end. And last but not least, the safe haven demand for the 20-day stock and bond returns, we are now at a high level. The last time was here and so forth. And the junk bond demand is at low end. It means that people are basically very complacent of the current situation right now. So with all these materials on my hand, I just feel that it's time to take a short position. But of course, if everybody take a short position, then naturally the market will go higher doing a short squeeze. But if you look around right now, most of the people I know who have shorted the market last few weeks have already covered their shorts and admitted defeated, and they are moving on right now. So if you look at this is Jim Cramer, all right? Jim Cramer, remember, reiterated there's a bull market, and that was exactly when Jerome Powell was speaking this last night, and the stock market shot up, and Jim Cramer at this point called for a bull, and he says that it's a reiterate bull. Then of course, the moment he said that, the market came down, right? So of course, everybody laughed at him. But we all know that in the later part of the day, the market went all the way up. So he was again spot on, although at the wrong timing. So the thing is, people say that now, okay, seeing that Jim Cramer is right, he's spot on, he's accurate, so let's follow him. Well, let's just check back on his record, okay? Now, back then itself, on the October 11, 2022, Jim Cramer was on CNBC, says that the market likely won't see a sustained rally anytime soon. And that was the lowest point the market went, okay? So after that, the market shot up, okay? Then after that, when the market pulls back down, Jim Cramer says that this rally will not last. And almost instantly, the market went back up again, okay? So now at this junction here, where the market is up quite a fair bit, Jim Cramer says that the market is heading for a soft landing, which I don't think so. In fact, I think that there is going to be a hard one coming in. So of course, again, it's very difficult to say who's right, who's wrong, but at least from the past and history, we can see that Cramer may not be the best market timer. So let's go back into 2007 and 2008. Now, from Reuters to American Banker to this Federal Reserve Bank of Lewis and Lewis data report, and of course the Washington Post, every time when they say that the economy is going to go into soft landing, we all know that the market will naturally fall, okay? And it won't fall small, it will fall hard. So from Reuters, right, remember back in 2007, they says that the US inflation are easing right now, and the economy should manage a soft landing. And this came from the Federal Reserve Bank of Dallas, and they're saying that, right, this soft landing with a slow convergence of trend is actually probable. And the best part of this thing is that the statement was the Federal Reserve actually cut a bowl half a percentage point to 4.75. So half is 5.25. The same number that the Federal Reserve now is going towards it, okay? And you notice that that was a point whereby the Federal Reserve decided to cut the interest rate. And we all know that what happened after that, right, in 2007, straight away in October 2007, the market was near the peak itself. And of course, in 2008, the market started to come down. And 2009, we saw the lowest point. So again and again and again, history has proven itself. But of course, you may say, maybe this time is different. Well, that is always the case. So let's just study the Fed Fund numbers again. Okay, I'm going to do it very, very slowly right now. Now, let's take a look here, guys. This is the Fed Fund, okay? Now, where we are trading at 4.5%, okay? And the thing is that they're looking at least 5.25, all right? And that will be somewhere around here. Okay, see that? That was where it is right now in 2006. So for 2006, after that, if Federal Reserve follow what they are saying right now, they will hike the interest rate to a certain level and then leave it for a while so that the economy can digest it. It's the same thing what happened in 07, 08, and then when Lehman crisis came in, we have that recession, okay? Then of course, we have higher numbers previously. Of course, that leads again to a recession. So basically, when Federal Reserve increase interest rates, it's always a prelude to a recession. And the scary part of the whole thing is the moment the Federal Reserve start to cut rates, you notice that that is where the recession usually starts instantly. So it seems that it's a very simple guidance here. That means that the Federal Reserve now has spent all much money in the market, and then they lower down interest rate to a very low level, they stimulate the economy. But to the point where the economy gets too hot, the inflation goes crazy, they have to pull the handbrake by increasing rate itself. And then after that, when it comes to the point whereby they so-called cool down, but that is where the economy feel the big hit. And when the Federal Reserve cut interest rate, the bank side will reduce in earnings, and across the board there'll be some panic, because that means that the Federal Reserve is telling the whole market that, hey, you know what, maybe we should do this rate cutting right now because the economy is not going to do well or can't take it. And that is one major concern right now. So traders are betting in, right? Apparently a trader bet $17 million on the Federal Reserve hiking to 6% by September itself. So there's no saying that each trader who is he from or who is she from, but they are buying that there could be a chance to see 6%. Wow. To see 6%, is it possible? It is really possible, even though I think it's 5.25 to 5.5. So throughout when Jerome Powell was speaking, right, this trader keep on adding position. So how much will this trader make? A lot of money if he actually get it correct. So the question is, who is this person? Which bank or which entity? So there's really no way to find it, but I just do a bit of research. I realized that Citibank did came out and says that, right, there's a possibility that the Fed rate may hit 6%. Hey, so it coincide, right? So maybe it's from Citi, how I know. All right, the thing is this, one of the analysts says that, right, it's likely to see the S&P trading to 3,500 this year, which is about 15% to 18% from the current level right now. So of course, again, he is advocating that continue selling on equity rallies, and I totally agree with this statement. So the thing is that now we all know that everybody is projecting the interest rate to be really hit about 5% stop, but I still think that we'll see 5.25, and yes, we may even see 5.5. So of course, again and again, at the moment now, people are getting worried, but the stock market is doing fine, right? So is that any good reason to worry? Well, let's take a look at this one, guys. This is the revolving consumer credit owned and securitized. Okay, so what does that mean? That means that the credit that people are actually holding right now on credits, yeah? So if you look back the thing here in 2008, whereby the total amount hit $1 trillion, okay, that was where we have the recession, okay? Then after that, when the recession came, market sold off, everything goes down. The market took many years to recover because of Federal Reserve coming in to save the day, cut the interest rate all the way down, and then stimulate by putting trillions of dollars in the market. Steadily, the market recover, and more people start to buy into the market. Okay, but the thing is that back in 2020, whereby we saw the market, the credit owned is even higher, about $1.1 trillion. And then again, we have the COVID incident and things happen again. So this is the thing. If more and more people borrow, and if this happened, now the thing is at the same time, if you notice this, the interest rate back then was 5.25%, which is very similar to where we are right now. And back then in 2020, the interest rate was at 2.25%. So now think about this, guys. We are now even at a higher level than not. We are now at 1.2 trillion, much higher than 2020, and our interest rate is about 4.75. And it's a very good chance to see 5.25. So if that's the case as well, basically the recession shouldn't be too far away. All right, because when a lot of people are borrowing money, and at your point, you must stop, right? And that is where things will really hit. And of course, now let's look at the unemployment rate again. So let's look at the chart, and you will see my point here itself. Take a look here, guys. Now, this is the unemployment rate. Okay, now just take notice here, guys. Back then itself, right, before the market actually collapsed due to the COVID itself, we have the unemployment data going to 3.5%, and that was the low end. And then after that, suddenly it just go up to 4.4% because that was where the this COVID thing hits, and after that you went all the way ballistic. Okay, so that was what happened back in 2020. But you look carefully back here itself, right? Back in 2007, before the Lehman crisis, we are also at the low end, about 4.2 to 4.4, and then after that, suddenly the number just go up on its own. So it seems that every time we hit a record level or the near record level, right, things will happen. So year 2000, it went to 3.8, and then after that, a few months later, we have the next recession. And of course, the most hiding one is 1970, whereby it went to 3.5 again, the same number as what we're having right now, and that was where US get into the Vietnam War. So it seems that every time when there's a big thing happening, there's a war will be coming in. So I just hope that the weather balloon itself will not bring anything crazier between China and US. So what I'm trying to say is every time when the unemployment rate goes to a low level, it's almost instantly we will see a reaction of high unemployment after that. So if you look back at tape right now, in November, December, many companies say they will basically let go people, right? So you let go people, it's not going to be like immediate sack of people. So if you do that, you need to pay a lot of money. So you give them notice, usually serve between 1 month to 2 months. So by right, next month, February, we should be able to see the real numbers increasing for the unemployment. And if that is the case itself, right, would that actually fast forward the recession fear? It is very possible. So that's the reason why I felt that, right, it's a very good time now to take some profit off the table and add some short position in the market to protect yourself, because I think the stock market is going to come down pretty soon, okay? I can't give you a specific date and time, but I know that it's very, very nearby. So if you look at the chart one more time again, I know you've seen this countless of time, but you notice that every time when the Federal Reserve start to cut their interest rate itself, right, you will actually see the S&P 500 coming down. So it is proven that whenever the Federal Reserve cut the rate, the S&P 500 will go down. And of course, as the market is increasing the rate, you also notice that S&P actually goes up at the same time. It's very phenomenal. So now the thing is that what the market doesn't want to see is when it goes flat. So once it goes flat, that is where the market will know that, okay, that means that the next thing will be actually a rate cut soon, and that's where the panic comes in. Now, of course, when a rate cut comes in, it's a very good time to buy some commodities, especially gold and silver, and that's the reason why I really hope that this time around the stock market comes off. Hopefully, gold and silver also come down as usual, and then from there on, you buy in preparation work to make a big deal of money when the Federal Reserve cut interest rates. Okay, this is going to be very, very important information, so take note of that. And when the price of gold and silver come down, don't hesitate, buy some and keep for a longer term, because this is going to be a long-term project, I can tell you that. Alright, so guys, hope you like my sharing itself. Let's go to the charts and see what we have for you for today. Okay, let's go. Okay, so let's take a look at the screen right now. Okay, so first of all, we can see very clearly on the Dow Jones right now, we have a very strong reversal. It's a BNB for us, so that means that the market can really go to 34,600 in the near term. If not, the pullback will be back to 33,000. But because of my KFC level, my cyclical pattern, it shows that the market, as long as it stays above this figure here, and that's 33,077, is very difficult for the market to pull back. If the market really want to come off, it has to come down and break below this point here, according to my TWB system. Then for the NASDAQ, you can see that ever since it's recovered from this point here, that is a very strong pull up on the market. So as long as this, I say again, as long as the market stays above this point, right, if you're going to sell anywhere here, you must know there's a risk involved. But of course, in terms of risk, if you sell at a high and the market really comes down all the way, the reward will be fascinating, okay? All right, so that is the KFC level. Let's look at the charts immediately today. So the Dow Jones now today is quite clear. We have a color change again, red to yellow. So by default, it is a buy above opening price. So 34,193 is a buy right now if you want to buy, and the first target could be a BNB RL at 34,257. There's somewhere around this area here. And of course, in context of that, it's above the MLP, it's above pivot 1, so by default, it's really a buy. But if the market pulls back and breaks below the MLP 34,014, then the selling may bring it down to 33,837. Both KSI and my KRW, this one shows very clear that the market is, let me take this away. Okay, there's some issue here. Okay, so that the KSI and KRW both are red, so actually it's not a good sign for buying. But because of the price action is above the pivot 1 and OP, right, if you want to buy, you can buy a little bit, but don't buy and expect a big movement. Now upside is 34,295, the next one is 34,442. The one that everybody's looking at is at 34,871. That is the extension, which coincides with the next KCB at 34,780. Okay, so that is the upside. The downside, right? Now, to me, as long as the market stays above the KFC, it's going to be very difficult to bring it down. But if any time it comes down, then the first target, I think it will go down. It could be as low as 33,032 or even 32,661. Yep. Okay, so let's look at the NASDAQ, shall we? NASDAQ also did a CCRY on a day chart, so by default, it should be going up. 12,776 could be the first technical level, which the market is trying to test it right now. And of course, any higher will be 12,984. And of course, all the way could be as high as 13,000. Now, the downside, right, I think the market has to break 12,626 first. Then we can see any downside. Downside could be the most is about 11,982. KSI is red. And KRW is cyan, so that's a mixed back signal here. So it's going to be a tough trade, yeah? Okay, for the S&P 500, let's take a look right now. S&P 500 today is still a yellow bar, so by default, it should be going up. The first resistance will be at 4177. That's the BNB RL. Breaking it above will send it up to 41.97 to as high as 42.68. But if the market breaks below 41.44 today, then of course the market may come back down and test the BNB support level, and that's about 40.87. Both KSI and KW are more positive, so it seems that the S&P 500 is more positive than the Dow Jones, which is very normal in this situation. Yeah. Now for the Nikkei, well, yesterday we thought the Nikkei would be coming back down to the BNB support level. It didn't. In fact, it pulls back up. Now, it has been a third day in a row the market stays above the BNB RL, which is at 27,523. So as long as the market stays above that, it's going to be very difficult for the market to come down. But interestingly, both KSI and KRW now has turned to the same side. Hence, therefore, the red arrow is there. If the market is to pull back, the market may come down to 27,272 level. But that is if the market breaks below the BNB RL level. Okay. All right. So that is Nikkei, and let's just take a look at the Hang Seng once again. This is the Hang Seng day chart, and of course the selling momentum is still on. The only thing is that the BNB support level is somewhere near here, and that's 21,260. So the market has been hovering around this area. If the market ever pulls back, then the first target will be 20,780. That's a level that I think the market could be going down. Both KSI and KRW both are red, so any selling pressure should be able to bring the market back down to this point, and that's 20,780. Okay, so traders take note of that. All right, so that we had the indices. Let's look at the forex right now. The forex, we have the dollar yen pulling back yesterday because the dollar came off a little bit, but I still think that the dollar yen should find strength again to retest 131.94 in the near term. Okay. Then for the pound yesterday did a BNB, a new one, so that means that the market range itself is wider. Upside target is 1.2230. The downside target is 1.827. So if the market really comes off instead and come down, right, do contact and let us know and see whether can the market go to 1.18. Right, so traders, this is something that to take note of that. And last but not least, we have this pound, dollar, and we could have euro. Where euro? Here we go. Now for euro, it came off already from the high of 1.10. So now today it's hovering at pivot 1 at 1.07 very beautifully. So only if it loses 1.07, then the selling will bring it down all the way to the next KCB. It's a fresh chocolate bar at 1.0639 level. So traders, you really need to take note of this, yeah, if you are really interested to short the euro. Okay, so we're done on that. Let's look at the crude oil market. Now for crude oil, we can see very clearly yesterday the oil blast up. Okay, I told you guys when crude oil was staying around here, $72. If people who want to buy can consider buying, and I did say that you can buy some, even though my preferred artillery level will be at 68. So we bought some yesterday, and then we noticed that the crude oil price just shoot up all the way on its own. That is fantastic. All right, it was from a $74.25 counter all the way to $77 plus. So today, what we're going to see is that if the market breaks the level here, we can see going all the way to this point is $80. Okay, so this trader, you must take note of that, yeah. But both KSI and KRW, both of them are red, so this is going to be a bit tricky here. So as long as the market stays up, then no problem. If the market stays below $77, then maybe just go slow a little bit, guys. Yeah, don't need to fight the market. It's really not going to worth it. Okay, so that we have the crude oil. Let's look at the gold and silver. Okay, let's take a look at the gold first. Now, gold yesterday rebounded, and we can see 1862.9 or 1863 is a very, very beautiful support. Hence, therefore, as long as the next round the market can come back down to 1863 level, right, I prefer to do that, buy and stay healthy together. All right. But of course, if the market breaks 1862, then the next support will be all the way down to 1832 to 1814. And I tell you this, if ever gold comes down to this area, it will be a very good time to buy. Yep. Okay. So for today, watch out for 1887. Breaking it, we'll see 1904. If it stays below opening price 1872, then the downside could be as low as 1870. So all this information you really, really need to take down. Yep. Okay. So that is gold. Let's look at silver. For silver, it has been coming down nicely, but today you can see that it stopped at pivot 1. That's a very good sign, and if the market stays up, right, all the way, okay, we can see it's this silver going back to $22.74. But if you ask me for the downside, I still think that it may be coming down to $21.35. This is what I feel about it. At the moment now, the KSI is red, but the KCX is also, KSCX is also blue. So that means the selling pressure is still available in the market. So traders, you need to go slow on this, yeah? Okay, so we have the last two coming in, which is Bitcoin first. Now, Bitcoin is just hovering between the range of 23,300 to 22,800 range. Now, KSI is red, KCX got blue bars. I mean, the selling pressure is there. So if the market loses pivot to 22825 or 823 to be precise, then the market can come back down all the way to 22,280 range. Okay, so that is for Bitcoin. And last but not least, Ethereum. It has been sideways for the last 5 days. So all I can say is this: as long as the market breaks above the BNB RL, which is 1678, we can see 1752. But anything lower than the low here, 1604, the selling should see 1530 instead. At the moment now, KSI is red, but KCX is no blue bar, so it can be a sideways because the buying and selling, and buying is all coming in at the same time. That's the reason why this counter is not moving. Yeah. So all this information is good, right? I believe you enjoyed it. Leave a comment. I will see you guys for next week for the Spin the Wheel Lunch with Kel. Yeah. Write your comment right now. Thank you very much for the support. This is Kel signing off. Bye bye.